Nathan from Queens, October 1st, 2022. I'm going to hit you off with a couple of videos, actually, three videos like usual. So, the first video, I had to do it because I need people to know that the market right now is nothing like 2020, 2021. It's completely different. And the last time I saw 2020, 2021 was the 90s. I did another video that details why right now is more closely like the 90s, but that video is like 8 or 9 minutes long. So please check out that video and look at why this is like 2000. The importance of this video is I was banned 18 months on Wall Street Bets. So I first came onto Reddit at the end of January, and almost immediately I was banned on almost every sub. So I'm banned on stocks, I'm banned on stock market, I'm banned on real day trading, investing. I don't even know. It's about 10 subs on Reddit that I'm banned. So it's hard to get notice. So what I used to do, I would bash people like Cathie Wood. I would say bad things about AMC, GameStop. People would ask me for links or proof. I would put links, videos, and ban. And they don't care about the context. They don't care if someone asked you a question, ask you for proof. If you put links, ban. If you say bad things about Cathie Wood last year, ban. So that's what it was. And the reason this is important, I got back on Wall Street Bets around the middle of August. And as we all know, it's very powerful. I would not say it's not powerful. There's almost 13 million members at Wall Street Bets. So even though I'm banned on stocks, how many people are in stocks? 4 or 5 million people? Wall Street Bets is almost 13 million. So that's where people go to check up information. In the middle of August, when I first came back onto Wall Street Bets, I wasn't allowed to post. So I don't know what it was. It was grayed out for me. A couple of weeks after that, I started testing a couple of posts. Like, I'm afraid to post things because I'm even afraid of what to say, because I'm walking on eggshells over there. I can't be honest over there. I can't have a strong opinion, or I'm gonna get downvoted so much they're gonna report me and I'm gonna get banned. That's how it is. So the last 2 weeks, I've been posting on Wall Street Bets, trying to help retail pivot, telling them a game plan on how to win. And this is retail. I'm contacting people on Twitter also, but it's nothing like 13 million people on Wall Street Bets. I'm getting feedback really quickly. So even 2 weeks ago, when I was just trying to be honest on GameStop, and understand this, I don't go to a pro GameStop post, go in there and say bad things about GameStop. That doesn't make any sense. So what I do is, if the title says I'm in GameStop, what should I do? Or will GameStop go again? So that's what it is. I went into a post that was saying, oh, GameStop is going to have another short squeeze, or we're ready to short squeeze, right? What do you guys think? So when you put a title like that, it should be welcoming opinions and thoughts of others, not only enter and comment if you have positive reinforcement. Now, the only reason I'm even talking about that is people were attacking me like crazy. The last week and this week, I posted ideas on Wall Street Bets telling them how to win, to buy puts, to buy ETFs that are negative, like short SP500 or short biotech. So then you don't even have to do options. You can buy the ETF that is already short that. But I was attacked. And I understand, because now I've only been on Wall Street Bets since the middle of August. I'm interacting with a lot of retail. So that's why this video is important. Most people don't understand that 2020, 2021 was the ultimate setup. Now, I did videos on this, but I briefly explain it. This video, I'm going to tell you exactly why. I've done videos on the short squeeze. I've done video last week on diamond hand, the real thing about diamond hands. But this is why 2020 and 2021 has not happened since the late 1900s. Well, 1990s. Sorry about that. So we had Fed funds rate at 0.125. It was locked in because of COVID. Because of COVID, everyone was locked down and all analysts had very, very, very low estimates. When you have Fed funds rate very, very low, when you have analysts very, very low, the setup to beat earnings is easy. When Fed funds rate are low, it's cheap to borrow. So everyone had money. The U.S. government printed $5 trillion, putting money everywhere. It is known, if you've been doing the stock market for a very long time, when interest rates are very low, valuations of stocks are higher. As interest rates rise, stocks go lower. I mean, that's an easy way to tell it. It doesn't go 100% like that, but it goes 95% like that. So that, along with the pandemic, everyone was sitting at home. People that weren't able to gamble were in the stock market. You had commission-free trading. So everyone at home, expectations low, and then once the economy opened up, every single company was beating badly. So when companies beat badly, everyone has money. You get higher multiples, higher PE ratios. The S&P trades at 17 to 18 times earnings. We were about 25 or 26 times earnings. That should already be a sign. It's artificial. We're on steroids. The S&P 500 since the 50s has returned about 8% per year. If you see the S&P 500 return 25%, something is wrong with that. It should give you signs. But the main thing with this is understand 2020, 2021 has not happened for over 20 years. It can happen again, but there has to be another big catalyst. So that it could happen again, but it'll be a long time from now. You have to accept that, because when people have high expectations, that's when you get disappointed. I'm Wall Street Bets. I'm reading people still YOLOing, buying dips on tech stocks, on memes. What are you doing? What are you doing? Do you see there is tons of fear in the market? Tons of fear in the market. You do not buy insane valuation stocks or memes that don't even make any money, nothing. And they need to borrow more money or they need to sell shares. Why would you buy that? Why would you buy that? So I'm on Wall Street Bets. Last week, I said, if you do the stock market a long time, since the stock market goes up 8% per year on the S&P 500 every single year, on average, now we're down almost 25%, but on average, we're up 8% per year. That means, we're bullish most of the time. But once every 13 or 14 years, bears come out. So reality is we have to be ready. We have to be ready. So if you want to do this long term, you got to see the alerts. You got to see the alerts and be ready. So when you get the alerts, that's the year. Stocks don't go up forever. The NASDAQ dropped from 10,000 to 6,000 and went from 6,000 to 16,200 in a year. That doesn't happen. When the stock market dropped from over 5,000 to 1,000 in the year 2000, it took 15 years to come back to 5,000. 15 years. So what do you think? 6,000 to 16,000 in 1 year? That's not normal. We can't expect that. So please stop expecting 2020 and 2021 again. What I can tell you, and I'm going to know before anyone, I'm risk averse. I'm a very careful trader. Based on what I'm seeing with the data, the market's going to keep getting lower. I will be first before billionaires, before hedge fund managers, before mutual fund managers. I will be first to know when things are going, when they're turning. When they are turning, I will come in and be super bullish, and we're going to make most money in that time, because 2020 was incredible. Most money is made during a bear market, not because you're in the stocks and then you go down with the stocks. Most money is made in the bear market because experienced people that have done this a very, very long time keep cash on the side. They're aware that these things happen. And when stocks drop and you get a signal, you come in and buy. Then when it goes up, we go to the moon. Now, I do that. What a lot of people don't understand, especially these new retail traders, over 90% of day traders, and this is even before 2020, don't make it. What a lot of people don't understand is close to 85% of money managers do not beat the SP 500 in a 10-year period. You could check the stats. I'm not saying nobody. I'm saying like 85% do not beat it. So out of 100 mutual funds, only 15 will beat it. 8% over a 10-year period. If you want to show me a mutual fund and they got 20% returns, okay, but you're looking, that mutual fund has only been around for 5 years. That means nothing to me. It means nothing to me. If you just wanted to make money in 5 years, take out the money, okay. But I'm not here for 5 years. I'm here long term. I do not care if you made a ton of money in 8 years. I'm saying 10 years because someone like Chase Coleman, who's Tiger, a Tiger Cup baby that made, I think 2020 he made $3 billion. 2021 he made $3.5 billion as a highest paid hedge fund manager, just in management fees. The guy is down over 50% in 2022. I think he's down 55%, and he's young. He's young. Look at Kathy Wood. She's not even young. She's old, but something is wrong. She's delusional. She's absolutely delusional. She's about to kill off 8 years of gains. She started in 2014 with ARK. 8 years of gains and be where it was 8 years ago. So that's what I'm trying to tell you. Only 15 out of 100 money managers, mutual fund managers, hedge funds beat the S&P over a 10-year period of time. And the reason why that's important is what makes you think, I'm sorry to say this, but what makes you think that apes that aren't in this game very long are going to return a lot more than a hedge fund manager or a money manager or someone that's with experience? All these new guys, even Bill Ackman. Bill Ackman is not young, but he's, I think, late 40s or early 50s. I would rather have a Carl Icahn, a Warren Buffett, Izzy Englander. I would rather have a Stephen Cohen, a Ken Griffin, because Scott Menard, because these guys been around. They've managed a lot of money and traded for long periods of time. Not like Chase Coleman 5 or 6 years. Not like Kathy Wood 8 years. And the reason why that's important to you is you guys are looking up to Kathy Wood. You guys are buying high-flying stocks. This is not the market to buy high-flying stocks. If you, the money manager, does not pivot, all the gains you made for 9 years is wiped out. So don't feel bad if you're down, even if you're down 50 or 60%, because big time money managers make the same mistakes. So what I'm trying to do, and I did on Wall Street Bets the last 2 weeks, is trying to show you ways to make money. All right. You don't make the same bets in 2020, 2021, when we had an insane bull rally, as you do in 2022, when S&P is down 25% and the NASDAQ is down 30%, and we're not even done. So pivot. If you do not pivot, now that I'm thinking about it, you cannot teach someone that doesn't want to learn. I wrote that also on Reddit. You cannot teach someone that thinks that they know more than you. You cannot help someone that already feels like they know everything. And for me, I don't take risks. We're going to talk about in the video 3, but I don't take risks. The importance of this video is this is not 2020. This is not 2021. What happened? Everyone was a genius in those years. Everyone. Yeah, you too. Everyone was a genius. Okay? But that's not normal. Okay? I made a video last April. You can check it out. Last April 2021. I said a very good trader will return 25%. An excellent trader, 50%. This is over 10 years. Each year for over 10 years. Not just 1 year. Even an okay trader, maybe 10%. Because like I said, money managers, 15 out of 100 will beat the S&P, which is 8. So that tells you where you're at. Good luck. That's video 1. Remember, just like I said, this is not 2020. This is not 2021 when everyone was a genius. If we want to make good money, we got to pivot, okay? In 2020, I was up 300%. 2021, about 110%. Right now, I'm up about 25%. I would be up way more, but in April, I had a lot of puts that expired worthless. What is terrible, I had roughly $35,000 expire worthless, zero. April 14th. If I would have had one extra month, I had puts on Carvana, $95 puts that expired worthless. I lost on Roblox. I think I had Roblox puts like 50. I had Brothers puts at 50. I had Snap puts with the 30 strike because I had like 12 puts. 12 or 13 puts, about 35,000. It's not the money. It's that a month later, my money, that 30,000 would be like 250 or 300,000. My Carvana puts alone were worth like 60 G's. I had about $4,000 on the Carvana puts that expired worthless, and that was 95 strike. And in May, Carvana dipped to like $25 from 100. So that alone was worth like 60 G's. That's video 1.